If I could only teach a new trader one concept, this would be it. Not fair value gaps, not order blocks, not support and resistance. It would be this simple three-step model called AMD, or accumulation, manipulation, and distribution. So in today's video, I'm going to talk about why I believe it's the most important concept to understand in the market. I'm going to go over each of the phases individually and explain them and why they happen. And then we're going to go over some really good chart examples from trades I've actually taken / am currently in, spoiler alert, to talk about why this is such a powerful concept and show you real examples. So let's get right into it. So the first phase is accumulation. And I want to go back real quick just to say that this accumulation, manipulation, distribution pattern can happen on any time frame. Price is fractal, so the same patterns and models repeat themselves across various time frames. So you could see this on the 1 minute, you could see it on the 1 hour, you could see it on the 1 week. So first of all, let's talk about accumulation, which is essentially what a lot of traders just call chop or consolidation. A lot of people think this is the worst type of price action to trade. I would happen to agree. So when you're in accumulation mode, you're basically just engineering liquidity. Now, what does that mean? You're stacking highs and lows within a range so that price can eventually run them, right? Which is essentially saying take out stops that are sitting at those highs or lows. Remember that stop losses sit at obvious swing highs and obvious swing lows. So when you have accumulation and you're chopping, you're creating a range full of these swing highs and swing lows. Look at how many swing lows we're creating around here. We've created a few swing highs up here. So this is a classic example of an accumulation range, right? You can see right here, this is an obvious trending market. And then once we get into this zone, we start really accumulating and tightening up. And if you want to thin it down, this is an even smaller accumulation inside of what I would call a larger overall consolidation accumulation range. Now let's talk about manipulation. And this, I think, is the most important one to be able to identify and to understand, because manipulation, if you've ever heard the term liquidity sweep or stop hunt, that's essentially what this is. So remember how I talked about how we will develop large ranges, a lot of liquidity. What you're often going to see is that we will have some type of fake breakdown. And this works particularly well with the fake breakdowns, right? So if you're looking for a reason to play upside, for example, if you're looking for a reason to long this, you're going to see right here, we get a pretty nasty looking breakdown, right, on the daily chart. Now, this ends up being a fake breakdown. So I'm going to mark this out with the red box because this is a perfect example of manipulation. Because right here, what happens is we build this crazy range. Now we've swept out all the swing lows that we had built up. But a lot of people are going to see this and think, okay, this was a generational top. This is a real reversal happening. We finally broken the range. You also might hear people sometimes say that the first move is the fake move. And that's kind of what the AMD model, the accumulation, manipulation, distribution model, seeks to communicate, right? This is the first real move out of this large multi-month accumulation range on the daily chart. And a lot of people are going to see this and they're going to start chasing because they think this is a real breakdown, right? You'll notice what happens, and it's even reflected in the diagram right here. The distribution move is often going to be much more aggressive than the manipulation, right? And it's actually going to extend past the highs from the accumulation zone, because now, since these are left untouched, these are going to be the new magnet for liquidity. And the thing about these, and why you have to understand how important it is it not only traps shorts into chasing right down here, right? They're chasing the lows. The circle's way too big. They're chasing the lows down here, the shorts are, but a lot of longs that wanted to see this bottom range of this accumulation hold, a lot of them are going to stop out here. So by the time you actually get the reversal, which is extremely aggressive and overshoots the original highs of the range, this is the distribution. A lot of retail specifically has actually gotten out of this trade, right? Because they're either now completely cooked because they shorted down here when they thought a breakdown was happening, so they're just getting fried, or it's longs that stopped out down here and then realize, oh my gosh, we're actually reversing. And maybe they start chasing up here, up here, up here. And that's what drives these distribution moves to be so much stronger than the initial move ever was. Because you get the fake out, and then you get burnt if you short and you chase if you're long, and that's what creates these really explosive moves. So that's an example that just happened actually on the QQQ or the NASDAQ. Now I've pulled up the NQ chart real quick because the QQQ daily chart has gaps, but one thing that you want to notice, or one thing that you want to watch out for if you're trying to play after the manipulation has happened, or after you suspect the manipulation has happened, right? Some people might see this and ask, okay, how do I know if this move down right here was actually manipulation, or if it's just a real breakdown and we're really just going to come up and retest and then dump more? And that's a very good question. The best way I like to look at it is just use some common sense and mark out the lows of the accumulation range if you had what you suspect to be a fake breakdown, and just watch very closely how whatever asset it is reacts once you get back to them. And if you notice right here, NQ stalled a little bit but never truly rejected, and had a monstrous push back up through this level. And that right there pretty much confirms that this was just a manipulation leg, and now we are starting the distribution leg. And so from there, you can at least expect to retest the range highs, but we end up going even higher as well. And so some people like to try to get in near the bottom. Some people like to get in right when we retest the level. Some people like to get in when we confirm that we've gotten back over that previous bottom with strength. Either way, in this example, like you can see, you would have been able to catch a monstrous move. One thing you'll notice is that we had a monthly bullish fair value gap right here. And then we had a weekly, I'll just change the box color as well. We had a weekly gap that also coincided with that area. So we had a weekly bullish gap, a monthly bullish gap. And so if you suspect that there's a move happening that's manipulation, like you could see right here on the daily, if you're suspecting that, it is a very good confluence, in my opinion, to combine that with a fair value gap. So for example, right here, we had this manipulation happen right into a very significant higher time frame bullish fair value gap. That is going to give you some extra confidence that this truly is manipulation and nothing else, right? Obviously, we've swept the liquidity. Obviously, we have what looks to be a breakdown. It's up to you from there to use whatever confluence is available to try to help you understand whether it's manipulation or not. But once again, you need to understand AMD as a concept to even be able to put that into, some criteria where you're looking to match it with a fair value gap or some type of order block, whatever it might be. You need to have a full understanding of AMD to begin with to be able to try to piece those things together. So that's what I was able to do this spring. Now we also have this setup that we had on MU, right? So this happens on NQ, it happens on ES on any time frame, it happens on your favorite tech stocks like Micron. Right here, we'll just get out of replay mode real quick because it's completely ripping. So we have this range, right, from about January all the way till March. We go pretty much net nowhere, and we're trading in for what MU was a pretty tight range. And then what happens? We have this very nasty breakdown look right here. What are we trading into, though? This is interesting. We're actually trading into a monthly bullish fair value gap. So let me mark that out. So when we have that manipulation move, we're trading right into a monthly bullish gap. What happens? We quickly recover the level, right? We have a very clean and strong move back into it and back above it, right? We have this gap up. That's pretty much your confirmation that this move is being accepted back into the range and that we're probably going to start a distribution leg. And we just end up absolutely ripping all the way up to new highs and a lot more, right? So from the lows, actually from even when we got back into the range, because that would be a more realistic entry than some bottom tick, we're up 60%, right? And from the lows, we're up 85%. So really insane move on MU right there. That's a perfect example as well. Another one of my favorite examples, frankly, of all time, if you've been watching my channel for a while, you've seen me talk about this Ethereum run in summer of 2025. We had a very, very obvious range forming. What happens? We have a fake breakdown right here. A lot of stops get taken out. A lot of people get scared out of their position. Where are we trading into? We actually happen to be trading into a major stack of daily bullish fair value gaps. Okay, so that's extra confluence. And what happens? We quickly recover and we end up pumping all the way back up to actually new all-time highs. It went on a parabolic from the time we, once again, recovered into this range, because I don't think bottom ticks are realistic. From the time we recovered into the range around 2300, 2370, we ripped over 100% in just about 52 days. That's crazy, right? And that's the type of setup that, once again, you will be able to catch shit like that if you are paying attention to AMD and really looking for the setups. So now I want to talk about one that's going on right now. I've discussed this at length in my free trading Discord, which is completely free. I do not charge. There's no credit card you have to put in, no email you have to enter, none of that, contact grabbing BS, none of that. Literally just click the link in the description of this video and you're in. I call out my trades in there from an educational standpoint. I go live and scan charts with you guys, all that stuff. And often when we scan charts, we're looking for this AMD. So right here on Tesla right now, if you look, and I won't guarantee anything will work out. None of this is financial advice. This is just my strategy, my ideas that I'm sharing to you guys for entertainment purposes, truly. But I'm also trying to educate you on my system. Do not take it as financial advice. But we have this monthly bullish fair value gap on Tesla. We have a doji monthly candle that we just put in to hold it, which could mark a reversal. And if you look at the daily chart, you can start to see this pattern, right? Where we have this accumulation range, right? And then I already have the red box to mark this manipulation. We had all these lows around 385. We come down, we sweep them all pretty aggressively. We make a brief recovery back up. We kind of start chopping around, and now we're recovering back into the range again. So this could be another setup where we get a very strong distribution up to like the 500s. I don't know for a fact. I'm not financially advising you, but I am positioned in this trade to be transparent because I like the idea of it. I like the way how it matches my typical AMD criteria that I like to see, which is a very obvious accumulation range that's preceded by a distribution, or sorry, a manipulation, and that's where I expect the distribution to kick in. So once again, we will just go back to the main chart for this video. It's very simple, guys. It's 3 steps, but if you really understand this and look for it and try to identify it and try to match it with other confluences that you have, you're going to be able to find a lot of trade opportunities that you might have once passed up on. Accumulation, manipulation, distribution. It is 3 steps. That's all you need. It's going to be very helpful to you, in my opinion, to understand why it happens. If you watch this video, that'll help you with that. So once again, it can happen on any time frame. It can happen on any asset. And I prefer personally to play the bullish version. Now, if you flipped this upside down, you would get a bearish version of it. And that can happen as well, right? Where you can take out the highs, manipulate above the highs, and then distribute in a sell-off. That can happen too. I just don't love playing it that way because I think there's always more of an edge longing assets for the most part, if you're talking stocks in the US market, than shorting them. So that's the video. If you're still sticking around, you're probably serious about trading. If that's the case, make sure to like and sub so you don't miss any of my content. I appreciate you guys all for watching. Click the link in the description for my free trading Discord and my trading X, where I post daily updates about all my charts, trades, everything I'm seeing. A lot of AMD content in terms of what AMD setups I'm looking at. And yeah, appreciate you all for watching. Catch you in the next one. Peace.